Hi everybody. Overnight, the story in the financial markets clearly has been the continued drop in oil prices, which in recent weeks have dropped quite a bit. As so often the case, financial journalists, financial reporters, and even economists are commenting on oil price developments in terms of what is happening on the supply side of the oil market. The story has been worries about oversupply. However, we would strongly argue that the main driver of oil prices in recent years has not been the supply side, but rather the demand side. What determines demand? Global monetary conditions. And here, of course, the most important players are the Federal Reserve and the People's Bank of China. If we look at oil price developments in recent weeks, it's actually very, very interesting to see that if you look at a graph of oil prices starting in March, early March, when the Fed started to talk about rate hikes, then oil prices started to decline more or less at the same time. In fact, also if you look at commodity currencies, starting to decline at the same time. On March 3rd, Yellen pre-announced that there would be a rate hike on March 15th. And in that period, we have seen oil prices decline rather sharply. That is the real story in the oil market. Not what OPEC is doing, what the Saudi Arabians are doing, or what Russia is doing. No, it's about monetary conditions. In fact, that has been the story since Janet Yellen became Fed chair in 2014. If we look at global monetary conditions since then, Janet Yellen, shortly after becoming chair, started to talk about the need of tightening monetary conditions. As that was happening and the dollar was strengthening, forcing essentially China to follow suit in terms of monetary tightening. So at a period during 2014, 2015, both Chinese and American monetary conditions were tightening at the same time. Obviously, that was pushing down not only oil prices, but also equity prices. That led somebody to wrongfully, in my view, think that oil prices drove equity prices. No, oil prices and equity prices were driven by the same thing: tighter global monetary conditions. In early 2016, Janet Yellen decided to step back a little bit. She had pre-announced 4 rate hikes in 2016, but she didn't deliver that. She only delivered 1. As a result, during 2016, we saw some lift up in commodity prices. Now, Janet Yellen is back wanting more rate hikes, again pre-announcing a number of rate hikes. What is happening? Oil prices once again is in decline. The question is, when will the drop in oil price stop? Well, that will end at the time Janet Yellen once again changes course and say, I might not deliver as many rate hikes as previously announced. When that will happen, we don't know, but it might be sooner than you think. Thank you very much.